All right, guys. Another intraday lesson right here, and we're gonna go over a quick lesson on fate retracements, how to use them, and how to identify levels with it. We got a clean chart of the S&P futures, and we're gonna use that for our advantage. This is I'll give you a couple of examples, right? So just gotta go to a clean part right here, so we can see a little bit of what I'll be talking about right here. And I'm just gonna draw it right here so you guys understand. Everybody knows what they are. Everybody knows the levels, and I'll show you my ways to use it. Right. So this works better on trend days because this is how trends are established. Right. On range days, typically like what are we seeing right now? We're seeing some type of range right now. It's not very useful. There's still levels to go for, but they don't tend to have continuation. On trend days, you're basically gonna have a continuation with those levels, right? Um, so you have two ways to anchor retracement. We're gonna analyze first the upside retracement. So you're gonna be anchoring at the lows of the move to the top of the move, right? So you basically have what you would call this upside move right here, right? So I don't. If you notice, I don't use any of the other levels, and this is just because I think whenever you are, they tend sometimes they do have significance. But let's say if you tend to go this high up, you know, you're mostly likely gonna go up to this high. I mean, the odds are the higher you go, the odds are increasingly that you're going higher, right? It's just a matter of position, a position and place in the chart, right? But let's say, for example, that you want to buy the dip on some kind of move, right? Some move upward like this. This is your favorite retracements. You're gonna have your three levels right here. I include a little bit of the 65%. Some people use 66. It's roughly about the same stuff, but basically means that you're gonna have viable pullbacks if you think it's gonna continue higher up to this level, up here this level, and this other level. But they represent different risk reward opportunities on the chart. So they represent a lot of different risk reward opportunities on the chart. So we have different names for this type of level. So I call the 38-2 retracement the strongest level. But the lowest risk. I mean the lowest. I'm sorry, the highest risk, lowest reward, but the strongest level. You're gonna have a 50% retracement because it's your mid size, it's your medium risk, medium reward, and then you're gonna have your 618, which is your low risk, high reward. And I'll explain you why. Just if you have a move that only retraces up to this much of the move, and then it goes higher, you're essentially you can look at it psychologically that the sellers only had, I mean, profit takers and sellers only had up to them to sell it that little bit of it, not that much to then have buyers against to pick it up again to this side. So this becomes way stronger, and just means that if you end up bouncing right here, the odds of breaking new highs, meaning that if you break this high, you're gonna have continuation, are increasingly higher, right? The odds are very high. Um, but why is it the high risk? Is because a lot of the times you do not tend to bounce right here, and if you buy right here, you're gonna end up holding up to here, see if it holds. You're gonna end up holding up to see if it holds, and up to here, the trade is done, right? And essentially, this is your risk, and potentially this is your reward, right? But your risk is higher. So the lower you buy the dip, the the lower is the risk you're gonna have. So meaning that let's go now to the 50%. So if you go down to a 50% right here, your risk is now gonna be from here to here, and your reward is gonna be greater, right, than the 38.2. We just don't know if it's gonna end up bouncing right here or right here. So your dip buy can be right here or right here, and it is the most common one, the 50%, and the odds are still that you have continuation higher after you break this high, if it happens, right? Um, it's they're still pretty good. They're still pretty good if you bounce at the 50%. It's like the most natural thing. The something bounces at the 50% retracement. Now we go down to the 618. The 618 is one of my favorites because it offers the lowest risk, which is like you will end up losing your money if you trade below this. And you're gonna have, if you end up making new highs, you're gonna end up having much reward off of this move. The issue with this is that the odds, if you have this much profit takers, this much sellers, the odds of breaking this high and having continuation are extremely lower. In fact, a lot of the moves of the 618 end up at a 10% extension. That's why I have this right here, and they end up failing and change directions to the downside. You know, they end up changing directions to the downside. So this is how you have to take it, right? Remember that every move has also a retracement, so you could also be met with the bear 618, which is a move from here to here, right? So which is basically a retracements of this move and then retracements of this move. So if you end up joining the 618 right here, you have to be mindful that your profits may have to take them at the next 618 right here, right, of the bear side, because this move was relatively large, and now you're gonna have a move like this. So that's what we have right there. And yeah, think of it always psychologically, like stocks and all that are kind of they have this to me, I represent this kind of moves like energy. Like to me, the flow of money is like a flow of energy. So you gotta think like there was some energy explosion right here to make this move, right? To make this move right here, there was some kind of energy explosion, and it takes a breather. There's some contraction of price where it takes a breather, and then it's gonna have another energy explosion. But remember, like it's just there was a lot of energy used right here. There was a little bit of energy gathered right here, and then to think that this is gonna go even higher after using this much energy is crazy. It's just, think of it like a look. To give you an analogy, think of it as a person running. You have this person running with a lot of energy, a lot of left in the tank. It takes a rest to run the same amount. You don't have the same amount of energy that you had before, right? So now at this point, the stock is tired or whatnot, so it's gonna take a breather. It's most likely gonna end up its move right there. It's gonna fail, it's gonna go to the other side and whatnot. So that's why if it doesn't use a lot of, if it's bouncing from a higher level, you know, then that same energy that will take, let's say, a move from here or here. I'm sorry, my TOS is super slow right now. In fact, I don't know what's wrong. That's that same move that will take energy that will take you move from here to here. Imagine if you extrapolate it from here to here, you tend to have continuation higher, right? Because you didn't bounce off the from that low, right? So kind of think of it like that way, right? So you're gonna have to use your favorite retracements as for odds and whatnot, right? So as Modal saying, that 618 is the golden zone, right? The golden number. So you actually, I mean, in actually the 618 and the 50% is the golden area, right? So I mean, a lot of traders, if you have big, not big appetite, but if you can withstand more appetite than a normal person, just buying at any point at this area is good enough, right? And stopping out right here. So who cares, right? Like if you don't get exactly the 618, but I mean, I like to a lot of times just pick exactly the 618. But I mean, buying in between is good enough, right? But sometimes exactly hitting the 618. And remember that if you are buying this on the bigger your fib is, right, the bigger your area is gonna be. So that's why using the correct time frame is gonna be important, right? Like we just seen on the weekly, we are between the 618 and the 50%, right? So you can buy in this area, but you're gonna have to have a very wide stop, right? Because your stop is only until that 6.5 is breached. But it's all according to risk appetite. Now, all this, what I just said, can also be done to the downside, but you're gonna take a look at it a little bit different. So you're gonna anchor from highs, and then you're gonna anchor from lows of the move. I'll show you a little bit of examples on how to anchor those moves. And this market is very squeezy, guys. Right now, look at how it gets bought up right away. Anyway, although anyway, the same idea, right? If you want to short the rip, you want to short somewhere between the same idea, same everything what I just say, same idea, and especially the 10% extension rule when you're coming off of a 618 happens a lot. That some end goes like this, and that's the end of the move, and then you start retracing higher, right? So this works well. I used to trade under this rule a lot for SPX, you know. So same idea, right? Um, let's go a little bit behind right here so we can find this action. We see this overnight move, right? When some news came out, and I took some trades off of this, took the whole range, right? About the 50% retracement of that move to see if it was going to continue higher. Had a wide stop, and it just continued higher, right? I took profits around this area. So this is a very good example, right? How to anchor this. Spy calls it the money. Congratulations, Jerry. So that's a very good example of that use, right? And then if you look at the next move higher, initiated right here, and he ended right here. So right here, you either buy the 50% or the 618 or whatever you like, right? And then you end up getting your moves right up to even when exactly a 50% extension up to here, right? So this is where you either, I actually took some profits on the long right here and then flipped short right here. I actually flipped short, and then I saw some red, and then I just that's when I I woke up to this move. I ended up closing it and whatnot, right? But you see the power of the fibs right now. Now on the short side, it works as well, right? So when do you know that you should start using the short side? Is whenever an upside move gets taken out. So something like this, start taking out the upside moves. This is actually a little bit. I don't think there was favorite retracement entries off of this. We're now squeezing. Technology is just strong right now, guys. So yeah, I actually took some shorts off of the 618. Like I said, sometimes you get that rejection, but you're not gonna get continuation. We actually, if you take that overnight move, right? You'll notice around those peaks right here. That's probably gonna be a selling area right here. The market manages to get up to here, the 618 or this 665, 66. Yeah, it could potentially be a short area right there. You know. So those are some couple of examples. There's a ton of them. There's a ton of them on the daily, as we were looking at earlier. That where we ended up placing the last year lows on NQ. 618 retracement from COVID lows to all-time highs. That's super important, right? So you can see that this is usable on all time frames, daily, low, weekly, 5 minutes, 10 minutes, hourly, all the stuff. Any questions? No questions? All right. So I guess that ends the intraday lesson. Any questions? You guys can, Alexa, dismiss. You guys can unmute yourself if you want, or even type it. I don't know. I'll give you a little tip, to so you can know where to anchor, because I get a lot of questions like, oh, how do I anchor my fibs? If you find it hard, like I know this 5 minute chart does not it's not all 5 minute red candles that will indicate you to actually anchor it like this, right? Because if you wanted to anchor just the red candles, you'll go something like this only, right? Those are all the only red candles of this move. But if you find it hard to find a right time frame or something, look at something that will have less noise. So meaning that you'll go something like the 15-minute chart. Come on, boy. All right, a 15-minute chart. Still some noise, some candles with some noise. Possibly like this. This is where we open right here. Possibly best to see this super green candle, with the 15-minute candle. You'll notice that it looks clean at that moment, right? We reached that 10% extension. It's rejecting at the moment. Let's see what happens. 30-minute candles possibly even better, right? For this type of move that we have. Is this at 30 minutes? No way. Yeah, 30 minutes look a little better, right? Look a little better because you can even anchor you don't anchor the move to the highs, you anchor the move to where the drop started, which is this, to where the drop ends. And you get like some kind of entry very close to a 618, you know, something like that, for further downside and whatnot. Like this, if you notice, like this 30-minute move, it's already invalidated to the downside, because of this candle that trade above this. It rejected, like I said, rejected the 618 earlier. I got like I said, I got a few scalps to the short side right here, but did not have continuation. That's when you just have to get out, and the ones that are ruling at the moment is the upside. That's what's ruling at the moment. Yeah, have you noticed also after this candle green, most of the sectors are, I mean, with this indicator, right? Most of the sectors went green with this. So it was when you see this, it's like most of the market, even though financials are red and whatnot, most of the market is is going positive instead of negative on this gap down. So that's when you look at your favorite tracements to the upside instead of to the downside at that moment in time. It's a massive short entry right there. It's a good one right there. Not only will you be shorting the 6.5 retracement right there, you're also shorting this pop right here that was on pre-market. We don't know if this is gonna have continuation, if this is a high of the day and then we drop from here. We don't know, right? But I mean that's a good area to target for longs. That's a good area to get at least a scalp for shorts. This is when you lose, And if you manage it, if you get a good entry on this, you just manage it where, I mean, a rejection like this should not go back up over here again. Should not visit this prices again if we're gonna go lower from here, right? You know, those are those are the areas uh, where this is the type of management that you have, right? And with a stop loss above this, then you have a nice entry. So you put a stop loss at entry, and see what happens after that. Looking at the ticks, we have some very positive ticks on that push. So this was short squeezing up to that moment. And if we end up seeing negative ticks again, like this is actually bouncing from extreme to extreme. So very volatile today, guys. Very volatile today. All right, I'm gonna. Any questions about the fibs or I'm gonna. I guess I'm gonna assume that you guys understood it all, and which is a very simple subject, by the way. But um, so I'm gonna end the recording right here.